Ladies and gentlemen, welcome back to the channel. Today is Sunday, tomorrow is Monday. That means it is time for an AMC stock price prediction video by the end of the week. Now, this week is very important for a couple specific reasons. The big one obviously being Fed Jerome Powell on Wednesday. The S&P 500 closed at a 2022 low. You guys will notice here that the lowest wick of this candle, then this is the S&P on a daily candlestick chart, was back here on February 24th. Well, we actually opened the day at 409.75. The low was 409.37, but we actually closed the day at 426.97. This was that weird day where the Nasdaq, the S&P were all down almost 4%, and we actually recovered to close up 1.5%. This was an historical day in its own right, and we've seen a lot of historical days in the last month or so. The Nasdaq is down about 13.7% here in just the month of April. So congratulations for everybody that is still here in the markets. I know there's a lot of people freaking out. There's a lot of panic and fear on Wall Street these days, but nonetheless, the fact that we closed at 412 flat on the S&P is a new low for 2022. So this week is going to be very important because the Fed on Wednesday, we're either going to get a confirmation that the markets are going to crash even more, or we are going to get a buy the dip kind of opportunity. If you guys remember back here, March 15th, the Fed meeting happened and we rallied 2.2% right after that. 2.22% the next day. The next day, 1.25%. The following day, 1.10%. And it was uphill from there. This was, again, another historic rally in 2022. It's literally vertical on the S&P 500. Now, if we do not get that same reaction, then the markets are going to get a little bit crazy. So we got a lot more to talk about than just that. Ladies and gentlemen, let's get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for doing that. If you guys want to come to support the channel as well as get access to all of my trades in real time, link down below in the pinned comment. This is earnings season, and now is the time to make the money in your trading activities nonetheless. Now, let's dive into exactly what is happening this week. And I first off want to start with the economic data that is coming out, because that is going to be very important heading into the Fed on Wednesday. Now, on Monday, you have ISM manufacturing PMI. That is a core reading of inflation that the Fed pays attention to, and the Fed meeting actually starts on Tuesday. It concludes on Wednesday with the Fed report, and they kind of outline what they are going to do. Are they going to raise rates? You know, what do they expect to happen over the next coming months as far as Fed policy? And then they come out and give that press briefing. You will see a very violent market reaction, just like we seen last time with the Fed, and you're going to get a lot of market sentiment direction based off of that. Literally off of the report, you are going to see the markets either rip to the upside or we are going to drop substantially to the downside, just like we seen back in that March 14th, March 15th period when the markets did start to rally. Now on Tuesday, you do have let's see, where is it? JOLTS job openings. Now, this could be seen as a positive or a negative thing if the job openings come in lower, because on one hand, anything right now that really prevents the Fed going as aggressive as they expect to get rates at 3% by the end of the year. Keep in mind, the mortgage rates are at they've went up in historical fashions. The mortgage rates are now, just in the last 4 months, have went up higher than they have in the last 10 years, right? The mortgage rates are higher than they have been since 2012. So anything that slows down that Fed rate hike expectation is going to be seen as a positive thing overall, in my personal opinion. But at the same time, there is the alternate argument to that, because GDP fell at 1.4% pace to start the year as pandemic recovery takes a hit. And technically, if you get one more declining quarter of GDP growth, you are in a recession. Now, obviously, this is not good, but it's like, what is better? You know, GDP, economic data looking bad and the Fed possibly not going as fast, or data looking great and the Fed reducing liquidity and potentially forcing us into a recession. So I'm not going to try to outline what I expect to come out of those data points, but I think it will be important for the markets. Now, coming on Wednesday, that's the Fed meeting. And when you get the Fed report and you get the Fed press conference, that actually comes out at 2 p.m. on Wednesday. You're going to get the report. 30 minutes later, the press conference starts. Now, you will get that first initial reaction, up or down. It will kind of confirm if we're going to crash, if we're going to come down substantially. I mean, we could fall 10-20% on the S&P and the NASDAQ from these prices, believe it or not. Some people don't want to hear that, and I understand that, but that's kind of what you need to know. That's like your worst case scenario. The markets fall another 10-20% after the Fed meeting if the Fed does raise at 0.5%. At the same time, history could repeat itself and we might see a bounce like we did back in March. I will tell you, the lower we go heading into the Fed meeting, the more likely we are to actually see a bounce. Now, what economists are saying right now about the overall stock market is that when the SPY, the S&P 500, is at 400, or if you look at the index, something like CNBC is at 4,000, the price to earnings ratio is at about 17. And that's more in line with where a fair valuation should be. At the same time, if the economy is slowing down and we've seen our peak demand via all the funny money, all the stimulus coming out in 2021, as well as the first part, 2022 with the child tax credits, then you could make the argument that earnings were the best they're going to be in 2022 for the next couple of years. So how do you value stocks in that market environment? Do you value them at a normal rate of growth in between 8 and 12%? Probably not. So there's a lot of different things going on right now. That is only really to do with America and the Fed. You also have COVID in China. You also have the war in Russia and Ukraine. Russia is a superpower. Well, we'll put that in quotes. Russia's not as strong as what people give them credit for, but they do have nukes, and that does scare the markets, because ultimately the fuck doesn't matter if you make a lot of money, if the markets go up or down, if the world ends as we know it, if a nuclear apocalypse happens, right? Not trying to be the doomsday prepper here, but that's a real market concern that market participants have at the current moment. So there's a lot of moving parts here, and things are going to develop in a very short amount of time, but the Fed will be key this week, and anything else on top of that is either going to be a bullish thing or another very bearish thing. Now, as far as AMC is concerned, I do want to switch gears and talk about AMC. So the short interest is currently sitting at 18.96%. These shares that are sold short is at 97.73 million. Cost of RMAX at 2.73%. Utilization at 100%, and days to cover is sitting at 2.49. Now, at the same time, you have had increasingly bearish option activity on AMC stock. As far as Friday, you had 4 orders totaling $161.96 thousand. Positive order value of 49%. Over the past week, it gets much worse. 110 orders totaling $30.76 million. Positive order value of 15%. And all of this, virtually all of this option activity is very, very bearish. So what is that going to do? It's going to artificially push down the price of AMC stock, especially when these hedge funds are buying these put options. Like, look at this, 15, 15.50, 15, 14.50, 15, $15 puts. It makes the break even like 1/3%, right? 0.3%, 0.5%. So if the stock falls that 1/3%, 0.5%, the market makers have to go out and short the stock to make sure that they can oblige for these options that they have agreed to buy or sell these stocks at. So that's what you have really been seeing over the past couple of weeks, in my personal opinion. At the same time, AMC has held up very well, and I want everybody to know this is the prime market conditions that we have been hoping for. At least I've been talking about for the last 6 months here on this channel. You need to see liquidity drying up, the stock market crashing, the bond market crashing, in order to see margin calls turn into forced liquidations, where the bank comes in and says, yeah, buddy, you have too much margin, you got a margin call. If you don't service this margin call in 2 hours, like the rule changes we've went over have indicated, they have 2 hours to service a margin call, or they get liquidated on their position. If the stock prices come down, if bond prices come down, if credit is more expensive, you now, over the past year have totally flipped the script on the hedge funds. They are not in a position to remain in short positions when they go against them. So that's the most important thing to know. We're primed for the short squeeze and we're just waiting on it. It's literally a time game at the current moment. Now, what we've seen during the last Fed meeting is that when the markets ripped, AMC stock absolutely ripped as well, going from $13 to $35 per share. That was an over 200% gainer. So if you are in the camp of thinking the markets will reverse, especially after the Fed, you probably want to be a net buyer of AMC stock. Now, I will not sit here and tell you to buy, hold, or sell anything because, after all, I'm not a financial advisor, but I actually encourage people selling because it's going to be more people that buy back in when the actual MOAS does start, when a lot of pressure gets put on these hedge funds that have short positions. So that's, in a nutshell, my theory on why I'm so bullish right here and right now, even though the stock has continuously came down almost every single day. That's why you should be bullish in my personal opinion. Now, the max pain is currently sitting at about $17.50 per share to close out this week. Now, I don't know if that'll happen. That would indicate that obviously AMC stock would go up about $2. What would that be? Like 25%, something like that, 15%, 10%. It would be a good move to the upside. I don't know if that's going to happen. We tend to stick around that max pain price. So just keep that in mind. Now, as far as the option activity, expiring May 6th, you see about 3,600 calls that are in the money, 70,000 calls that are out of the money. Yes, that can push some option, delta hedging and gamma hedging by the market makers. But what you really see push AMC stock on a daily basis are those weekly options traders that come in on a Tuesday or Wednesday and buy options that expire on Friday, that have very low break evens. And when the stock actually does make those big moves, all of that weekly option activity does push the stock up in a very dramatic way. That is why I've not covered the Stonko tracker data as much, because it's not as important for those weekly moves. You can look at some of these options that have a lot of option activity, like the July 15th expiration has a ton of option activity. You can look at that and it can be a decent indicator, at least to show you that there will be volatility around that time, potentially a big move up or big move down, but it doesn't necessarily tell you the likelihood of seeing an actual gamma squeeze. It all comes down to the Fed this week, and that is going to be the main key. Now, as far as coming this Friday, there's two scenarios I want to play out for you guys. We'll start with the worst case scenario. If the worst case scenario happens and the S&P just absolutely falters after the Fed and we go into no man's land, like we break 410, we close under 410, we are in no man's land. You're either coming down to 400, finding support at this prior gap level back here, January to April of 2021, or you could come down as low as 360 on the spot if conditions get worse, right? And a lot of stocks, for comparison, this is the 2020 high, this is the 2020 low, and I mean, a lot of stocks, like look at PayPal, look at a lot of these companies, besides the large tech companies like Apple, Amazon, Google, I can't even say Facebook anymore, but those stocks, they're not under these 2020 levels. But a lot of other stocks, look at PayPal, look at Square, look at these other players, and they are already down at these levels. So for me to say it's not possible to see a major, downward move right now would be doing you guys a grave injustice. So I don't want to do that. But the worst case scenario is this S&P 500 falls to 400, potentially to 380 by the end of next week, especially if there's a very bad reaction off of the Fed. Now, we've held a lot of support around $15 per share. If AMC, the markets do come down, I think we will still hold a lot of support around 15, but I think we could go as low as $12 per share. If we fall to 380 on the SPY and there's a full capitulation day, everybody's panicking, they're selling out of everything, just shit hit the fan on Wall Street, and not in a good way, and the S&P does fall to 380, 370, 360, then AMC stock will likely fall to $10 per share. That's going to be your next level of major support. That would be like a 30% drop from here, 45% drop from here. It would be very dramatic. And we've already felt a lot of pain in our AMC position. So I I don't want to rub that in. I don't think that the markets are going to fall that much off of the Fed meeting this week, but it is possible, so I want to put that out there. That is your worst case scenario. Your best case scenario, we get another bounce after the Fed. We could head back to in between $21 and $25 per share. Now, my base case scenario is a bounce after the Fed, likely coming up to retest the 1829 50-day moving average. That's going to be what I would expect. That's where I would put my money on. At the same time, like I said, I don't want to be naive and tell you that everything is peachy here, that we're heading to all-time highs. Not necessarily the case. Fed meeting comes out, markets bounce, then we could somewhat expect to see what we seen last Fed meeting, and the markets just absolutely ripped. AMC stock ripped as well. Now this time around, if AMC stock does move up in a dramatic way, liquidity conditions are primed to see the MOAS, like I previously said here in this video. So you could see another leg of the MOAS start to develop, and we could head back, even 35, 40, $45 per share if we do see a small short squeeze. Obviously, shorts are not inclined to cover on all of their short position. We've never seen them cover on the whole entire short position, but still, either way is possible here. Either $12 per share, $10 per share is like your worst case scenario. Best case scenario is in between $21, $25 per share. If it's really, really good and the Fed comes in and makes the markets really, really happy, we could go in between $35 and $45 per share if that does start a small short squeeze, as well as the weekly option activity, like I also previously talked about earlier in this video. So that is going to be all for this video. That's what you guys need to know. Watch the $10, $12 level to the downside. Fed is good. $21 to $25 per share is what I expect, but I do expect to either drop a lot or rip a lot by the end of this week, by Friday. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Let me know what you guys think. What is your price prediction for AMC stock by the end of this week? As well as that, if you guys want to come join the trading community, get all my trades in real time, as well as join a great community, a group of traders that do this every single day, over 100 people. Check that link out pinned down below in the top comment. But that is going to be all. You guys enjoy the rest of your Sunday, and I will see you in the next one.